wonderful guys at Ammo Marketing. You met them or met Cam last week at Morning Startup when they did a live podcast. They run a podcast called Weird Growth, and they were interviewing Tyler Spooner from the Group last week. So what I would like you to do is head to ammo.marketing and find your way to the Weird Growth podcast and hit the subscribe button. So that would be great. And you're going to get in your podcast app some fantastic content as soon as they put that out. Really good interviews with Perth founders and innovation folk. So go and check out and while you're there, check out what they get up to. They can help you out with growth marketing. They're all over the pirate metrics, the acquisition, the activation, the revenue, the retention, and referral. Yes, I think I got my pirate metrics.
Well done.
Cam can fill me in on that. So
Cam is
really great guys.
But
they're helping us cover the costs of all of this Zoom stuff and everything while we're running this from home. So thank you very much to Ammo. If you've been to one of these before, you'd also know that Beecham Group is a long-time sponsor of Morning Startup. So there's probably a lot of people out there maybe looking for work at the moment. So if you're in that bucket, please go to beechamgroup.com. They've got a list of their current openings. Glenn is a very well-connected guy with almost every company here in Perth. So he knows what's going. But if you are a startup and you're in the luxurious situation of actually being able to employ people right now, also go to Beecham Group, and I'm sure they can hook you up with some great talent as well.
I just want to give a quick heads up to those of you who are trying to potentially jumping on the YouTube channel. It is failing me, unfortunately. So jump on. If you know anybody who is, just let them know to just jump on the normal webinar link, and I will then just take the recording of this and post it to YouTube. But YouTube, you're failing me.
Damn.
Hit that button.
Because he played with Facebook first.
It is. I tried. We thought we would stream to both Facebook and to YouTube, and it's failed us. But no, we are recording this. So basically, I'd like to give a massive shout out to Charlie, Patrick, and all the guys and girls over at Startup News. If you haven't heard of Startup News, it is a great medium to get information as to what's going on every week, every Friday. I love getting that email come through. And just reading what's happening in the startup space here in Perth and WA. Be sure to go and check it out, and definitely subscribe. And if you've got a story you want to share with them, I know there's been quite a few stories in the recent weeks going through, hit them up and they'll definitely do a shout out to you. I want to give a shout out to TechBoard as well. If you with Peter, if you haven't listed or haven't claimed your profile at TechBoard, then go across and do it. In these quiet times, you definitely need to be shouting about what you're doing and letting the world know, and no better place to do that than TechBoard. So pop across there and grab your profile. Again, I have to say, unfortunately, I'm not drinking a Voltage Espresso coffee this morning. I so wish I could be drinking a Voltage Espresso coffee. But as I said last week, when we're all done and dusted and we can all go back to some form of normality, please go and visit these guys over in Voltage. And as I mentioned before, don't ask for the Morning Startup discount. Just pay full price, pay more for it. In fact, buy 2 coffees and you'll get more done because of the caffeine. Yes.
Good way to put it.
Yes.
All right. Well, I'll also do the shout out to Space Cubed, where Dave is obviously sitting right now. They run a couple of co-working places in the city, one called Riff at 45 St. George's and another one called Flux on St. George's as well. And look, there's probably not a lot of people heading into the offices right now, but they're also running a lot of online programs. So if anyone there from Space Cubed is on the chat, please feel free to put some links in there. I know you've got the hashtag Adapt Don't Stop, and you've got a page around that as well where you're supporting local startups to put up their ideas and their struggles and just chat about how we're all getting through this time. And they've also run the +8 program. So if you're an early stage startup or even later stage, they've got different programs to help you through making your business successful. So definitely get around the Space Cube community.
For sure, for sure. Niche, did we talk about niche? Sorry, I was just reading the Q&A then for a second. There's quite a few coming
No,
through.
I haven't done niche.
No, so niche, if you are
First
looking for
video.
some great content there, then check out niche interview. Jurgen and the crew basically do record a lot of the content that we put out, and it's got some amazing presenters on there. For example, we've got Michael Molson, to name a few. If you want to go and learn about how to do startups and business and just get some general information, and go across to niche interview and check them out. So yeah, I don't think we're just going to give up on the YouTube channel. I'm really sorry. I will just upload it later on to it, but we've got enough space at the moment. This can handle 100 people viewing. So hit that button. Just to mention though as well, we also have a Q&A as well in this. So we just want to get your feedback as to in regards to what's going on at the moment, the current climate. We just want to get your feedback. Yes, you can say apologies. You can't see the question, the live stream. We will try and get that fixed. There's a few shout outs here. I'm going to go shout out to Jimmy Lockhead, definitely looking for a role. Jimmy, I would definitely say talk to Glenn. Just unfortunately made redundant. Go and have a chat with Glenn. He'll definitely help you out. If anybody else in that way, then definitely use the mediums here. Use the meetup group. Use the Facebook group. As a community, we will help everybody else out. So, any other shout outs before we jump into the main topic of the day, Scott?
No, I'm just looking at the chat, and thanks, Callie, for popping the links in there to the Don't Stop. Keep them coming if there's anything else that you want to put out. Also, Brendan Murphy's put a link there to the Australian Innovation Stimulus Package. So thanks for that. If you want to hit us up, you can do so on the socials. We're Morning Startup on all the things, or send us an email at contact@morningstartup.com. Cool. And also head to perthstartup.com.au. It's an active Slack channel for Perth founders and entrepreneurs. So get on there and have a chat with us.
Brilliant. So without further ado, I'm going to jump straight into and welcome our very special guest on board, Shane. Shane, welcome to Morning Startup.
Very well. How are you going?
Yeah, not too bad, Shane. So for those of you who've never come across Shane, Shane is the managing director of the Elevate Accounting Group. For full disclosure, Shane is our accountant and does run a great team over there at Elevate Accounting. But he also does a lot of help in this space for a lot of other startups here in Perth. So very much geared to how startups work, how they operate, understands the pains and the cash flow issues that we as startups will go through. So who better than to get on board here and to run us through what this government stimulus is all about than Shane. So welcome, Shane, and thank you very much for taking some time out of your day to come and talk to us.
No problems at all. No, great to be here, and hopefully I can lend a hand, and we'll see where this adventure takes us, I think.
Exactly. So again, I'm just going to get straight out the pits here with. So what's it like out there? You're obviously at the coalface talking to all these different businesses, large, small. I know you deal with some very large corporates, and then right at the smaller end, you deal with the likes of ourselves and a lot of other kind of well-known startups in the Perth ecosystem. What's it like out there?
Mate, it is carnage. There's no other way to describe it. So from the very big to the very small, I don't think there are many. Like I've got one who's growing, and I've got a whole lot who are reducing. So no, my view at the moment, mate, is it is absolutely carnage. It's a revenue preservation game as opposed to an expansion game. There's probably a few little niches and a few little unique opportunities in the market, but I think broadly as a total economy, be it in a small area or in a global area, it's the most challenging time I've come across in 20 years. So it's very difficult.
So is this any different? Is it what do you see that's different about this particular crisis versus, like, for example, if you're old enough as well as a few others have heard to remember the .com and to remember the GFC? How is this different?
Yeah, look, say GFC.com. I mean, they were problems, but they funneled down from one area. So GFC was the banking industry, and then that pushed sideways from there. What we're happening at the moment, though, is basically every vertical is being attacked. You're in hospitality, you're in aged care, you're in tourism, you're in retail, you're in construction. So the challenge at the moment is it's a war on so many fronts. that there's very few safe grounds. Whereas GFC, it funneled from one area and then just spread its way sideways. So that's the big problem. And the second problem at the moment is just the unknown timing. Are we going to be sitting at home, and are you going to be sitting in RIF for 2 months or for 12? So the uncertainty of timing also makes it very difficult to plan and to manage an outcome.
Brilliant. I see. Yeah, it is definitely unprecedented times. Definitely calling on certainly innovation. So how's the government helping us then? So I know you've got some slides for us. I'm going to let you take over the presentation here at this point and run us through. How what is the government doing? It definitely seems at the moment there is a lot of money. I want to understand, is it good money? Is it cheap money? Is it money that a startup should be leveraging at this moment in time? And if so, how do we leverage it?
Yep.
Specifically, given that startups have a lot of contractors, a lot of people in this space. So I know you've got a presentation there, so I'll let you take over and share
no
your
problems.
screen.
All right. Let me put the slides up. All right. How's that going? You got that there, Dave?
Just coming up now. Perfect. There we go.
Cool. All right. So I suppose to put some context around it, now it's an unprecedented time, and I suppose we'll talk about the different initiatives they're doing now. But to your leading question, Dave, was is it money well spent? I think with the rate of change and the speed, it's going to be very hard to determine. So I mean, the packages aren't ideal, absolutely not. But are they good packages? It's 260 odd billion dollars, 130 billion going into JobKeeper, and that was a package announced Monday last week. So in 9 days, they've had the biggest government spend in history, and they're pushing it through Parliament today. So, I mean, it's not perfect by all means. It's wide-reaching. There's definitely some flaws in the program, but you know what they've done. As most startups do. You want to get out there, you want to push hard and early, and they've just got to get something to market. And they've gone with a package that they thought could help. I mean, I could tell you 100 examples of times that it's not going to work the best for some people, but I could also tell you of 1,000 chances where it's going to work really well for others. So, Is it ideal? No. But you know what? They had to do something, and they did 130 billion in 9 days. They just had to move fast. So, I mean, there's definitely going to be people who are challenged with this, and we'll talk more about obviously the startup space and contractors, and more about how I suppose we can make sure that the structures suit those contractors. So we can definitely get them in. We've just got to do it in a smart way. So today, what I wanted to cover off on is the 4 key items. So JobKeeper, which is the $1,500 a fortnight. We'll talk about the $100,000 cash boost. So that will definitely help some of our businesses online today. Rent relief for those that are out there with their own premises. This was one where they formalised the code of conduct yesterday. SME guarantee scheme. That's the $250,000 bank loan that half secured by the government that you would have heard of. So we'll talk about that one. And then we'll quickly take you through the other measures. So look, there's a lot of data today. So the slides have all the detail. I'll talk more through it at a high level, but I've put some contact details at the end. So if anybody wants a copy of the slides or to talk to one of the team, then you're more than welcome to.
Brilliant. Thank you.
All right. So we'll kick off with JobKeeper. Okay. So JobKeeper in essence, and we've all heard about it. The news are doing a bad job at actually describing it appropriately, but essentially what it is, it's a payment to businesses or not-for-profits, so long as they're eligible, to help them pay employees. So what the government want to do is they want to retain that employee-employer relationship. It's $1,500 a fortnight, so it's a fair whack. It's a fair chunk of money. And that $1,500 a fortnight, it doesn't matter if you're an eligible casual employee earning $50 a week, you'd still get $1,500. Likewise, I imagine Alan Joyce. I'm sure he's eligible to get this, so he will get $1,500. So it doesn't allocate different money. It's $1 for all, and it's just a simple payment mechanism. In theory, I suppose the reason the government are doing it as a simple number, not an adjusted number per person, is it's using the business and the ATO system in lieu of Centrelink if people then had to go to Centrelink. So that's why it's a flat dollar number. They're just reducing the Centrelink system. It is an incentive. I mean, the Centrelink payment's around $1,100 a fortnight. So obviously this JobKeeper package is better than the JobSeeker package. Important one for startups at the end, they're monthly in arrears. So you technically have to pay your team the $1,500 and then claim it back come end of month. So we'll talk about the cash flow implications of that as we go through, but that's an important one that we've just got to bear in mind. So effective date, 30 March, which was, I say, last week. And by that 30 March, we mean that's when the wage period will start. So even though we're talking about it today, and what's today, the 8th, it starts with payroll effective on the 30 March. They've implemented it for 6 months, so they've said it's going to run through until September. Now, one of the issues we've got is how and when we've got to be eligible. So we can satisfy some of the tests today. Does that mean we automatically get it for 6 months, or do we have to retest every month, or retest every quarter? So that's a question that isn't answered. Look, today's focus is obviously getting people through the doors today and make sure they're eligible. But there should be some guidance coming out on, is it one check once and you're good, or do you have to check progressively as we go? So that's an area of uncertainty, but you know what, we've just got to deal with it. We're 9 days in. Second criteria is that we need to have, obviously, turnover has fallen or will likely fall by 30% or more. This is the one that a lot of people that I talk to have quite a problem with. There's one test that the government has published, and they've said that what they want to do is they want to check your March 2019 BAS to your March 2020 BAS. And straight away, if you've had that 30% fall, you're eligible. This is a tough test for a lot of businesses to pass. You might be a growing business, you might be a startup that didn't exist 12 months ago, you might be a scaling business, you might have had a great January and February this year. So it's quite odd, but a lot of businesses haven't passed this test if you just go down this line. And particularly when the turnover test says that you might likely fall by 30%. So they're allowing you to forecast into the future, yet they've given you a test which is historical. So that's one of the flaws. However, that's just because that's only the one test they've published. They've been very clear saying that the tax commissioner, so the ATO, has discretion that they can apply for alternate tests. And they've specifically stated in the Treasury papers, some of those examples would be newly established businesses. So a business that might be 3 months old, might be 6 months old. Doesn't mean they're eliminated from these tests. It just means that we don't know the exact registration criteria for them. The Treasury papers make specific mention of businesses scaling up. So if you've been on a growth journey for the last 12 months, then obviously you might have taken a hit, or you will have taken a hit to revenue now, but you're still going to be bigger than you were 12 months ago. So the papers talk about creating alternate tests for them. It just doesn't tell us what they are yet. And it also lets us talk about businesses where their turnover is typically highly variable. So that could be businesses that are very project orientated. They might have had a very big project, but they had none 12 months ago. They might have just landed a big project, and then they might not get one now. So there are all these situations, particularly in the startups and for the newly established SMEs. The simple answer to them is there's no clear rules as to whether you'll be eligible, but the ethos of what the government are trying to do is to give this to as many people as they can, because they want to contain or retain that relationship. So I'm expecting that we'll get guidance on these that should actually allow us to be very clear as to who's going to satisfy the tests. And I think we'll be good. One of the real challenges will be those startups that have never had revenue, because they do want to say that you've got to have a drop in revenue. So we will have a challenge with, a startup that's still in the dev stage or hasn't got their MVP sorted. How are they going to satisfy this test? But we'll look at some options for that as we come up. And then the last thing I think we want to add in there, that anybody on the call today, if you haven't registered to participate, even if you don't know if you're eligible, jump on the ATO website. There's a big registration. It's really like an EOI. You're just putting your name in and they'll give you more details as they go. But I definitely recommend people jumping on and registering on the website. And a really, really important day today for us. So legislation is actually with Parliament today. So both houses are convening today. It will get passed today. So hopefully tonight, we should get the final legislation or an explanatory memorandum that gives us more of this detail. But look, they're working very fast on it. It's not as clear as we would like, but the intention is to give it to as many people as they can. So that's really the theme of conversations I'm having with my startup clients at the moment.
Hey, now, Shane, sorry, there's just a question in the chat just on that. So even if we are not paying a team member $1,500, we are eligible to claim this or not?
Absolutely, yep. So even if you're not paying them $1,500, you then get to start paying them $1,500. So you might have a 1 day a week casual, dev person, and you might be paying them, $300 for the day. What would happen now is they would then, so long as they're eligible and they've got to be an employee, you would then get paid from the government or reimbursed $1,500 a fortnight. So the rules are very clear for that dev person. If you're paying them $300 a day for 2 weeks, that's $600 a fortnight. You now pay them $1,500 a fortnight, even though they're only doing 1 day's worth of work, and the government will give that back to you. So it can be capped. I was out at a retail business a couple of days ago. We had some casual employees earning about $60 a week. one shift, they're now going to get the $1,500 a fortnight. So they say, if we remember that the government are using this as a subsidy for Centrelink benefits, that's why they're saying, look, if you are working, we're going to give you the 1,500, because if you didn't get it, you'd be going to Centrelink anyway.
Makes sense.
Right.
Makes complete sense. Yeah.
It's a good move. The HO infrastructure is in place. It's a good way for the government to get some money out there quickly.
Definitely is.
Okay, eligibility criteria. So there's obviously a couple of criteria that you've got to be for the business, but also for the individuals or the employees themselves. So an eligible employee, and this is really important, this one, part-time and full-time employees as of the 1st of March 2020. So as of like a month ago, they had to be employed with you. Can't pick them up now and get paid for it. Or casual employees, note the date change, 1st of March 2019. So a casual employee must have been with the business, or they say from 12 months from March 2020, which makes it March 19. So that's a real trick in there that we just got to make sure that, first of all, you categorize your employees properly. Are they full-time, part-time? So are they permanent? Are they getting leave entitlements? Or are they casual? Because a casual employee who's been with the business for 10 months will not get any money out of this system, okay? That's one of the big problems that Labor have with the system at the moment. But Christian Porter's, the Attorney General, has come out and said, look, this is what it will be. So we'll definitely have some unfair situations where long-term casuals who have been there for 6, 7, 8, 9 months will not get access to this system. They will have to, if they're stood down, go to Centrelink. So very important fact that you define that. Got to be 16 years old. Okay, got to be an Australian citizen, holder of a permanent residency, or a special category 444 visa holder. And those special category visa holders are more aligned at New Zealand residents. So that's another key criteria. Just have to make sure, because you might be a full-time employee, but you might not have, for example, you might be from abroad, you might not have your PR residency yet. So therefore you may not be eligible. So very important that you double check these. Got to be an Australian resident for tax purposes. So somebody who swings in and out of the country for a few months here and there and doesn't do a tax return here, not going to be eligible. And to that example of that casual dev employee that we spoke about before, doing 1 day a week, if he were also working, or he or she were working for other businesses, they can only get this JobKeeper payment once. So if you do have some casual staff who might have 2 or 3 roles, you do have to get them to provide you confirmation that they're not getting the $1,500 from anybody else. If they are, you can't pay it to them. So you can only get this once. You can't double dip. The money tree's only got so many leaves. So that's the criteria for employees. So I think on the last slide, we looked at the business, got to have a reduction in revenue. We've looked at the employees. So to the question, Dave, that you led in with as well, how do we handle contractors? So unfortunately, a business with contractors who are stood down, or you have them on your normal payroll, but you're paying them on invoice, the business cannot pay JobKeeper to that contractor because they're a contractor. So they're simply not eligible. However, that contractor themselves, they might be personally eligible based on these tests that I'm about to show you. So I believe contractors are still okay. It's just that they're not going to get the payment from the business. They have to apply themselves.
So we've got a few questions here. Do you want to, they're popping in. This is a very, very hot topic, as you can understand. We've got 49, 50 people watching at the moment. So it's a very, very hot topic here. So one of the questions here from Brendan is, if you're a startup and there's generated revenue, but the directors haven't taken a wage or fee, would you still suggest to apply?
I'm going to hold that question if I can. Just want to get to the bottom of this slide. I'll give you some answers.
Okay.
All right.
Do you want me? Okay, get to the bottom of this slide.
Let me finish this slide. This is my last JobKeeper slide. Then I'll hit your questions, okay? So for a self-employed person, you've got to satisfy those tests above. So you've got to be 16 years old, got to be an Australian citizen, etc. You must have your personal turnover fall by 30%. So if you're a consultant working for 3 businesses or 1 business or 10 businesses, if your personal income falls by 30%, you can then still be eligible, but you've got to apply personally for it, okay? You must have had an ABN before the 12th of March 2020. That's very important. So you can't set up a brand new business and then try to get this. So you've got to have existed before some of the rules came in. And this one's an important one that we understand as well. And you've got to satisfy one of these 2 tests. You had to have essentially been a consultant in 2019. So when you lodged 2019 tax return, did you have business income? If you didn't, you've got to go to the second test. Have you lodged a business activity statement with the government before the 12th of March 2020 that reported income? So what the tax office is trying to do here is they're saying, if you're a consulting or a small individual or a little business of yourself, you've got to have reported income to the tax office through a tax return or a business activity statement sometime before the 12th of March 2020. So if you've done that, then you're eligible. If you haven't done that because you're new, or because, let's say, you've got a very bad lodgement history and you've just never lodged a business activity statement, they're going to penalise you by saying, nah, you're not eligible. Okay, and so that's if you're an employee, if you're a contractor or a self-employed person, and that would apply to, obviously, some of our startups who are using contractors. The contractor might be able to apply themselves, even though the business can't. The one final point then, so for entities not paying wages, and this goes to the question we have from Brendan, they've released some guidance a couple of days ago. So what they're saying is one director or one trust beneficiary or one shareholder who receives dividends instead of salaries or one partner in a partnership can nominate to receive JobKeeper if they're actively engaged in the business. Now, I've seen no legislation around this. I've seen no detail, and often the devil lies in that detail, but this is what they've announced in the Treasury Papers. So to Brendan's question, if you're a director who's actively involved, I would, yes, be nominating, because they're not going to start making payments until the first week of May. So we've got essentially, 3 weeks to work out exactly whether you will qualify. But they have said that if you're only one director out of the company, if you're not on payroll to get the JobKeeper, we'll allow one director to then register. So if you've got 5 directors, none of them paid, then you'll struggle. But if you've got 2 directors, none of them paid, at least one person will get it. So to Brendan's question, yes, I would nominate. They have expressed obviously some guidance around if you're not taking a salary, but I would put the nomination in, which is just register the business. And then these rules should be clarified, or they must be clarified in the next 3 weeks, because they're going to start giving out cash in the early May. So we've got a bit of time to work that out. So the tax office have tried to accommodate situations where owners aren't drawing a wage, but they are limiting it to one owner per entity type. So company, trust, partnership.
Perfect. So we got the questions are piling in. So hopefully Brendan is acknowledged that helps. So we've got a question here from Wendy.
Yep.
What if you don't employ anyone other than yourself? So I guess that refers back to,
Yep.
your structure as a director.
Yep. So you're still eligible. You've just got 1 employee instead of 10 employees, so long as you're paying yourself. If you're not paying yourself, then you go to this bottom paragraph. You might be a director who's unpaid. You would still be eligible so long as you're actively engaged in the business. But I say we need a bit more detail on this one. So if you satisfy all of the other eligibility criteria in terms of revenue dropping, those kind of things, I would still register.
Yeah. Question here from Michael. What is the significance of 1st of March 2020? We haven't been negotiating bringing someone on and did so just after that date. Are they eligible?
Yep. So the 1st of March 2020, if we talk about the significance of dates, so 12th of March is when they released one of their early packages, and I think from memory that was the cash boost, which we'll talk about in a second. 1st of March was just a magic date they pulled out of somewhere to say this is the date that we want to have this. No science, no fact, no fiction. Just 1st of March will be the date. So no science at all.
Their employee who are then negotiating with, they've brought on after the 1st of March. They are eligible? No,
they are not eligible. So eligible employees at the top of this slide, full-time, part-time employees as of 1 March 2020. So employees hired after 1st of March do not meet the criteria. Even though the business meets it, that employee won't be deemed eligible because they hadn't commenced as at 1 March 2020.
Yeah. Okay, perfect. We've got a question here from Chelsea. Registering for the JobKeeper on the ATO, is that registering for updates or is that another registration for the payment?
No, so there's one registration process. The one where you're registering for updates is the only thing they've released at the moment, because what happened is when this was announced on Monday last week, obviously the tax office had to be ready for an influx. So all they put up there was that registration for updates. That will then tell you when the full registration is available. So that's why I say it's a bit like an expression of interest, but the tax office had to put something up. So register for that. You'll get the official updates, but they will then tell you when the full registration is available. And it'll be quite a process. You have to register, and you'll also then have to be selective as to which staff qualify. So it will be quite detailed, and that'll happen over the next 3 weeks.
Yeah, I know that we registered the companies we're involved with, and it was a very easy process. Essentially, just as it's one registration, if you have got multiple companies, it was just one we put in just so that we get the update. As yet, I haven't received anything there, so I guess they're still trying to work that out.
Yeah, see, I think I've received a text message once from them, but not a lot of detail. They just want people to register now, and then they'll work it out as they're going.
Can we use grants or R&D incentives to meet the revenue criteria? That's a good question. Can we use grants or R&D incentives to meet the revenue criteria if we are custom or pre-revenue, basically?
Yep, no, that is a good question, and the answer is don't know. So the first test that they announced, that reduction from a BAS point of view, so March this year, March last year, that was purely based on whatever you reported in your BAS. So as an example there, if for some reason you disclose that R&D incentive as revenue in your March 19 BAS, then yep, the rules say you'd be in. If the grant was taxable, then potentially yes. We don't have that level of detail yet. The grants, I believe, would be an easy one because they would have the nature of revenue. So if you got one 12 months ago, didn't one today, that's probably more aligned. R&D feels a bit like it might be out of the realm because that's really a tax incentive coming back through. But look, on those situations, for everyone on the call, and what I would say doing is register. You know, as I say, we've got time to work it out, but you'd rather be in there and then realise you're not eligible than not be in there and then realise you were. So I would register, and then we'll take the time. You know, when the rules come out next couple of days, hopefully, or the law comes out, they'll give us more direction, and then we work it out as we go. This whole thing is a moving target. That's the best I could tell everybody. We're just kind of working with it on a daily basis.
So there's a question here just around the casual employees that have not been working for 12 months or so.
Yep.
Do you see that likely changing?
No, I don't, because it's going to legislation today. So yesterday, the government reached agreement with the ACTU, so the trade unions. Labor have been very keen on extending it to casuals who haven't been employed for 12 months. However, the Liberal government have been holding their line on that one and saying we're not making that change. So I don't believe that will happen, purely because today that legislation, and they will be sitting now in the lower house, is with government today. So unless there's some miracle change that happens today by Labor pushing it in, even though Liberal have got the votes, I can't see it happening because they've held the line for so long on it. And that's been one of the two big bones of contention so far have been, how do you prove this revenue test, and why casuals at 12 months? And they've been flagged from day one, and the government have held their line on it. So personally, I can't see that changing. I do feel it's unfair, but it's the situation that we've got.
Okay, so I'm going to hold fire because these questions are coming in thick and fast. I'm going to let you get on for a couple more slides.
Cool.
It is very topical subject at the moment. So, jump ahead.
Keep going. All right, so I'm going to finish JobKeeper now. I'm going to move to the cash boost. So the cash boost is this 100 grand. This was the one announced back around the 12th of March. And this is cash support, so a direct cash give out to small and medium businesses. They first announced this as a minimum 2,000, maximum 25,000. Then a week later in the second stimulus package, they increased it. So minimum 20 grand, maximum 100 grand. It's applied, so the mechanism, it's given to you as a credit on your tax office account. So if you owe the tax office money, this credit will offset what you owe them. If you don't owe them anything, they'll physically give you the cash back. Okay, to be eligible, quite simple criteria. Turnover less than 50 mil. Have you made payments to employees? So this is where you've got to have done things like your single touch payroll. Have you processed a pay run for employees, whether it's wages, whether it's directors' fees? And you must have the same criteria as before. Had your ABN on the 12th of March, so got to be an existing business. And you must have included income in last year's tax return or in a BAS statement lodged before the 12th of March. So these rules came in on 12 March, and this is their method of saying nobody can register today and then get in. You've got to be a business as of yesterday. So if you satisfy those three criteria, and to be honest, like every one of my clients has satisfied these except maybe the turnover test, so it's a lot easier. You don't have to do anything. This will automatically happen, so no applications required. And they'll give you back these funds. Now, I'm going to talk over the page about how we calculate them, and I do appreciate everyone that are moving quickly. But for every small business, every startup on the call today, if you've got an employee and you had an employee who you paid, let's say in the month of March, regardless of the size of your business, you will get that minimum $20,000, okay? For the bigger businesses, they might be somewhere between 20 and 100. For the really big businesses, they might exceed 100. But this is a good one from the startup space, so long as you had employees. So individuals who run a company but never put themselves on payroll, unfortunately, they'll be excluded from this because they didn't process pay-as-you-go withholding on their wage. Charities are eligible for, so long as they're registered on the ACNC, and that can even be the new charities after 12th of March. So they're allowing new charities who are set up to help to also get this benefit. Okay, calculation methodology. This is quite confusing, but I'll try to make it simple. If your pay-as-you-go withholding, so if the amount of tax that you withheld from employees was less than $10,000 between March, April, May, and June, which we're in now, this April, you'll get the full 20 grand minimum. Even if you had a casual employee and you withheld zero tax, so long as you reported to the tax office that you paid that casual employee 50 bucks, you're going to be eligible and you don't need to do anything, you'll get 20 grand. The second category of businesses are those that have pay-as-you-go more than 10,000, but less than 50 in the March, April, May, June periods. And if you lodge, for example, your BASs every quarter, the good thing about a March quarterly BAS is it extends to January, February. So theoretically, they're saying if you've got employees between Jan, Feb, March, or late May, June, if your tax withheld is between 10 and 50, we'll give you access to the benefit. You'll get between 20 grand and 50 grand. And the way you work that out as a rule of thumb is you get $2 of benefit for every $1 of pay-as-you-go during that period. So if you withheld $30,000 between Jan and June, you'll get a $60,000 benefit. That's the simple rule of thumb. And if you've got turn or pay-as-you-go withholding more than 50K, then you're going to be capped out at the 100 grand. So businesses above that, you're simply capped out, regardless of how big you are. There's a little trick in this that if you do your pay-as-you-go monthly, so every month if you report an activity statement to the tax office with your pay-as-you-go, when you're doing your calculations, you get to triple your March number, because somebody who's quarterly, they get the benefit of January and February. So that the government have said, well, March people, just triple it, and that way you get the extra 2 months. So quite a little trick in that calculation. So that's the calculation method in a really simple manner. The way that it's paid, so how will you get that benefit? All right, the first half, so between 10 and 50,000, you'll get during March through to June every time you lodge a BAS. So if you lodge your BAS in March and you're eligible for 10 grand, you'll get 10 grand in March. When you lodge your April, if you've still got room in your cap, the 50 grand cap, you'll keep getting it. So basically businesses will progressively get this from March through to June until they hit the 50 grand limit, okay? The second tranche of the payment is another 10,000 to 50,000, and that's going to be applied in a second time period, but in a different way. So this, you get 25% of your benefit equal, so fixed 25% monthly for June, July, August, September. So it doesn't matter how often you lodge your BAS, you're going to get a monthly type benefit out of this fund, or if you are lodging quarterly, you'll get it in two installments. But what they do here is that the tax office or the government have said, however much you get in this first payment period, so March through to April or through to June, you'll get that identical dollar payment in the second period, regardless of what your wages are. So as I say, this as a payment, it's a credit to your tax account. It will reduce the amount that you owe the tax office. So therefore you save your cash by not having to pay the tax office. If you owe the tax office money, they're going to use this to apply against your debt, and you don't have to do anything other than keep lodging your BASs, and this should magically appear on your account. And if for some reason you're entitled to a refund because your account goes into credit, they will give that to you in cash. And this will be initially processed starting 28th of April. So anybody who lodges their March BAS now, my advice is don't pay it. Wait until the 28th of April when they should put the credit on your account, and then you see what you owe them after that point, or if they owe you money. So that's, guys, that's a really quick synopsis of this cash boost. I understand that might be complex, so as we can take questions as we go. But it is one that's eligible for people who are withholding, pay-as-you-go withholding. So this doesn't apply to contractors, and this won't apply if you run your business and have never been on payroll. Unfortunately, you won't get this benefit. It's a rebate against actual pay-as-you-go withholding.
It certainly comes across, and I know per first hand, because I know you've helped us through this as with our businesses. And the one thing that we're finding at the moment is obviously with any startup, a cash flow is king. And the way that we're looking at this is that it's definitely made it harder for us to manage, where we sit from a cash flow point of view, because we're not sure when this money is going to come in. But nevertheless, we're actually going to be better off now as a company to help us weather this storm. So it's definitely a great thing. I think, though, there's a lot of companies out there that potentially are not going to fall within these brackets.
Yep, absolutely. Yep. And if they don't fall in these brackets, I mean, hopefully they fall into JobKeeper. But the good news is that $20,000 minimum. So a small business who may have just had 1 or 2 small employees, regardless of their size, they'll scale up to the 20 grand. So that's a good one.
So there's a question here. There's a couple of questions from coming in both the chat and both into the questionnaire. There's one here from Mary, which is, if payroll started in April, are we eligible for the second tranche?
If payroll started in April, so no. If payroll started in April, no, you've got to have been, hang on, I'm going to go back a slide. You've got me, Mary. So to be eligible for the second tranche, you just have to be eligible for the first tranche. Oops, and I've pushed too many buttons. Anyway, I'll let that thing work its magic in the background. So let's go to these questions here.
So there's another question here, which is, if the company structure changed 9 months ago, but they've got casual staff for over a year, but only 9 months in the current structure, do they qualify basically to claim?
Yes, under this one, because what we have to remember is the 12-month rule for casuals. That's the JobKeeper question. Under JobKeeper, we don't think that business will be able to, or if the business has evolved, there might be a story that we have to ask the tax office, but that's JobKeeper has that 12-month question. Cash boost that I'm talking about now, there's no time period. You just have to have had those employees and be registered pre-March this year. So in that example, that business would be eligible for cash boost because they've got those employees on payroll. Look, going forward, I'd have to go off the top of my head, Mary. I think so long as you meet these criteria, that your business had an ABN pre-March and you had the different registrations, if you start to employ new people, I believe that you would get the pay-as-you-go withholding benefit from them for the future, April, May, June period. And then whatever benefit you get for them would be duplicated for the second payment. But if you start employing people in July, you won't get that benefit.
Yeah, makes sense. So the question here from Brendan is, it's nice to get the cash boost, but does it need to be repaid in the future?
No, free money. My wife always tells me about free money. So this is free money. So the tax office don't want it repaid. It's not taxable income, so you don't have to report this in your tax return, and nor do you then have to pay tax on it. And if you're in loss area, it won't eat your losses up. So this is literally free money from the tax office. For all the startups out there, you could probably knock 100 grand into your revenue line item on your next pitch deck, because it will be money coming in. But no, this is non-repayable. This is just a gift from the tax office to let you keep your employees.
Yeah. The question here from Cam, how do you think you'll need to prove the 30% change in revenue? What if a business wasn't turning anything over 12 months ago?
Yeah, okay. Once again, we're crossing messages here. So cash boost, nothing to do with the 30% drop in revenue. You just had to have employees. So that's a JobKeeper question with that 30%. And that's where, remember, we had that slide with that little underlined bit talking about tax office or commissioner discretion. That's going to come into the discretion category. And Cam, hopefully today when that legislation's passed through Parliament and we get the explanatory memorandum, we'll have more details. But no, that's definitely in the JobKeeper side of things. And we don't have colour around what those rules are going to be yet, other than Treasury recognising that they've got to handle businesses that aren't atypical and haven't had linear revenue for the last 12 months. So they've got to do something to accommodate the starting business, the growing business, or the business with volatility. We just don't know what that is yet. We don't know whether it'll be automatically worked out or, whether a person at the tax office has to review the situation and push the button. But they will do something to support. We just don't have any colour around what those rules are.
So there's a question here just around from Charlie on the cash boost. Can you repeat the bit about waiting to April 21st to pay your BAS, please, again? Will we see our 10K credits on the ATO site when we lodge our BAS?
Yes, I can do. So Charlie, the date of the 21st was actually the 28th. So you're a week ahead of yourself. The tax office said that they won't be able to process these credits until the 28th of April because they obviously need to get their system sorted out. So what I was saying there is if somebody lodges their BAS early, let's say you lodge your BAS today, and on that BAS, it's not going to tell you about your cash boost. You're just going to do a normal BAS. And if that BAS says, look, you got 20 grand to pay, my advice is don't pay it. lodge your BAS if you want to, but don't pay that 20 grand. You have to wait until the 28th of April, and that's when the tax office has said that they'll start processing the credits. Because if your BAS says you've got to pay 20 grand, wait until the credit is processed on your account. And if they process a 10 grand credit, then you know you've only got the 10 grand differential to pay. So if you did it today and lodged it and paid the 20 grand, you could, but it'll hit your cash flow. They would refund it come the 28th of April. But my advice to business has been, so long as you're lodging on time, wait until the 28th of April. You should see that credit appear on your account. It might happen a bit earlier. The tax office have maybe over-promising or under-promising and over-delivering, so it may happen earlier, but you won't see it when you lodge your BAS. That's the main bit. So lodge your BAS, give it some time, check your account, make sure the credit's been applied, then pay the lower value, so that way you keep your cash in your pocket.
Brilliant, brilliant. Yep, perfect.
Brilliant. All right, I might move on. I'm going to hit the next couple of topics really quickly. Once again, cognizant of time. So rent relief. There was a code of conduct released yesterday at the national meeting talking about rent relief. It's available there on the pm.gov.au website. So this is one where they've said that landlords must share the pain with tenants. So essentially what they want to do is, if you're eligible for JobKeeper, that's the first $1,500 one, then you're eligible for this, and this will be mandated through every state, so it's got to be in place. And what you get is, you get to share the pain with your landlord. So if your income has dropped by, an example, 20%, or let's say 40%, third bullet point on this page, the landlord must drop your rent by that same amount, and the way they drop it, so let's say they dropped it by 40%, half of that drop must be a waiver to your rent, i.e. you never have to pay it back to them. The other half of that drop must be a deferral spread over the life of your lease. So if you've got 3 years left on your lease, they have to take that rent reduction bit and then amortize it over the balance of your lease. There's some other factors. They can't kick you out. They can't charge you penalties. They can't, execute on your guarantees. There's not a lot of detail on this, and there's going to be a lot of questions on this whole package, such as, what if your revenue drop changes every month? What if it's 30% this month, then 40 next month, then 50 the month after? What does that do to your rent? Answer is nobody knows yet, but they are looking at ways to protect businesses from having to pay rent. And importantly, they're looking at ways to keep the tenant in the building so that when the economy turns around, you've got tenants in buildings, and therefore that's good for landlords, good for business, good for economy. Conversation with your landlord's the most important thing. You've got to sit down and agree it together, because this is a compulsory framework of very minimum level activity that must be abided by, but you still need to engage in an active and ongoing conversation with your landlord. There's going to be a lot more on this one coming up, but at the moment, we don't have a lot of data on it, other than to say it was released yesterday.
Yeah, it makes me kind of regret paying up front for 6 months, but
You've always been a stinge, though. SME guarantee scheme. So this is that 50% guarantee that the government will give to banks to let them lend to you. Businesses with less than 50 million turnover are eligible. It's for working capital to pay your bills and your wages. So you can't use this to go and make an acquisition or, stock up on IT gear. Maximum dollar value, $250K. Repayable over 3 years. So the way you have to repay that, 6 months with no repayments. The bank will capitalise the interest, and then principal and interest over the next 2.5 years. So that's the feel of what the message is. And the government will back half. You don't need security for the other half. Okay, this one's a real problem. That's the government headline announcement, and you look at that on a page, particularly as a startup, and you think, awesome, this is going to fund us through. I don't have to go into a cap raise. The banks then have absolute discretion as to how they apply these rules. And I've been dealing with all of the banks, and they're all doing it quite differently. So whilst it's a clear-cut message from the government, it is not clear-cut when you come to the bank. And this is the trick, and this is the problem for startups if they're trying to access this. You've got to be able to essentially prove that pre-COVID-19, pre all this problem, could you have afforded this loan? So could you have repaid this? And let's say you borrow the full $250 and you've got to pay that off over 2.5 years. That's something like $9,000 a month. The bank would look at you and say, you know what, before this whole problem, could you have made $9,000 monthly loan repayments? If they think you can, then you're probably going to get through. If they think you couldn't, then you're probably not going to get through. So the government have given the package out to help banks with some certainty, and they've put $40 billion into it. Now, though, at a per bank level, they're all enacting these rules differently. So don't think of this as an easy kill. I found it quite difficult. And the only way that we've been able to get this for other businesses is by showing before this problem, you know what, this was a good business and they could have paid this back then. So when the world returns to normal, they'll be able to pay it back to you now. So it definitely won't help the scaling up business, the small business who has got a very bad history or very tight cash flow. You don't have to get 250 grand, you might get 50 grand. But the goal is, could you have paid it back before this world went into chaos? I'll speed through, just really conscious of time. Asset write-up, 30 grand up to 150 if you get a full tax deduction. Relief for financially distressed businesses. So insolvent trading laws have been relaxed. So you can technically trade whilst insolvent for 6 months and your creditors can't have a go at you. And stat demands, they can't claim a debt. Obviously don't recommend insolvent trading, but they're trying to help businesses push the line a little bit harder. Anybody who's got an apprentice or a trainee, you'll get a 50% wage subsidy from 1 Jan through to 30 September. And that's my close. I'll give my generic closing. This is going to last for years. So we're in a bit of a situation now. The world or the economy has deferred itself for 6 months. So bank loans, tax office loans, everything is pushed down the road for 6 months. So my personal view is we're going to have a lot of business failure in September, October, November, December after this 6 months kind of hibernation period ends. So be very careful. If people owe you money, make sure you're collecting your money. And today, the conversation I'm having with people is, look, you know what? We've got to focus on how you recover. But importantly, the world's going to return. We've got to focus on things later on. So if your business has been closed down, or if there's nothing you can do because your clients have closed down, work on your business. What improvements can you make? How can you be more efficient? If you were starting the business again, how would you redesign it to be more efficient? If you've got employees who are stuck at home and can't do work, what else can you get them doing to add into the business? So these are all the things that I think people should be working on now if they're limited in doing their daily operations with their business. Because at a point in time, the world's going to open. We just want to be there when it does.
Perfect.
There it is, Dave. There's my hit, mate.
Thank you very much, Shane. I'm going to give you a virtual round of applause there for Shane and everybody. Obviously, there is a lot to go through. There's been lots of questions. It's been super engaging. There's a few questions here around will the slides be made available? Absolutely. Whilst we've had issues with putting this on YouTube, we will take the route. We recorded this. We will then stick that back up on YouTube.
Dave, I've put my office manager here, Kat Marshall. So her email's on screen. So anybody who wants a copy, if you email Kat, I'll let her know that's coming, and she'll be able to just direct email a copy of the slides to anybody.
Perfect. There are a few last questions here. Obviously, we don't have the networking part as it is now. We've kept our audience pretty much all the way through this. It peaked at 53 and we're at 48 at the moment. There's a couple of questions here. If you have an existing tax debt with the ATO and they're postponing this for 6 months, can you use this cash payment to essentially pay that off?
That's not a question or a choice. That's what will happen. So this cash boost will be credited to your account. If you owe the tax office money, they will apply that credit to any debt you have straight away. You don't have the choice of getting that refunded. So cash or tax debts, you can now defer technically for 6 months. And you should also be able to get that interest free from January this year. But no, if you owe the tax office any money in that entity, this cash boost will be offset against money you owe them.
Perfect. Just to clarify, if we employ in March or April, will we be eligible for the cash boost, but PAYE must be on the 28th of March? That's from Melissa. Did that make sense to you?
Or kind of. I'll answer it how I interpret it. We'll see if it's right. So long as you had those employees, so long as you had employees pre-March, then yes, you can employ new people and you will get the cash boost. Okay, so that's for the cash boost, because that's all to do with your pay-as-you-go withholding that you report in the months of March, April, May, and June. What you won't get for those new employees is the $1,500 JobKeeper package. So the government is still giving you an incentive to employ people, and they're giving you that pay-as-you-go withholding cash boost.
Yeah, I did actually see as a sudden note this morning that the government have increased, obviously with everybody now working from home. I know as us as a business, we got like 10 employees up in Applecross next to the office where you are. And obviously we're all now working from home. I understand now the government has changed the rules around the working from home credits. Yeah,
so look, working from home used to be able to claim a tax deduction for your home office expenses by either a certain amount of your expenses or by cents per hour. From memory, it used to be about 52 cents, and now they've increased that to 80 cents. So when you lodge your personal tax return this year, from March, April, May, June, you can claim 80 cents per hour for time worked in your home office without having to worry about counting your electricity bills and those kind of things. That's above and beyond, obviously, all the furniture you had to buy to deck your office out.
Yeah. And there was with regards to the bank loans that we spoke about. Obviously, it's varying the information we're getting out. I know that the bank we bank with has been very shady in actually offering out. You've got to call them to discuss it.
Yep.
Any startup and SME looking at this space to go, hey, look, wait a second. As you rightly said, there could you use this to as a cheaper than investment?
Yep.
Is that the right approach, or is it a bad approach? Is it something unless
it's a per situation approach, I think. I mean, so let's say you're a business and you were in revenue, so potentially you've got to be profitable because the bank are going to want to see, could you pay this back? So let's say you're a business that's scaling up, you're in revenue, you're making some money, and then you want to then go on that next scaling journey and you're going to have to employ people or get more devs on board. Then if you had to raise the capital to do that, I mean, I think it makes sense. You know, if you can get $250,000 from the bank, debt is cheaper than equity and the interest rates will be about 4.5%. It might help you then achieve better scale early by using bank debt to fund the wages, fund the dev costs. And then in the future, when you pay it back, you might have increased the value of the business. So you might then have to do your cap raise, let's say in 12 months time, but you'd be hoping that the increase in the share value is there and that way you're less dilutive. So it could be a good strategy for some businesses who are in revenue, in cash flow, but who need a boost and they need a bit more cash flow. But we've got to remember that it's a loan, so you have to pay it back. But a good deferral strategy, you know, you might buy 12 months of time before you got to do your cap raise, and then out of your cap raise, you could use that to pay back the bank loan, and then get the extra money. But you might have increased your val and got more traction in the meantime.
Yeah, definitely.
So a case by case basis, but it could be a good strategy to preserve some of your cap table.
So we're at the hour. I'm just going to check the questions one last time. I'm going to give everybody an opportunity. We will make these slides available. And we will obviously share this video on YouTube and in the channels there. Just going to check the questions. So if you win a co-payment grant, could this be something you take to the banks?
Read the question again for me. If you win a co-payment grant, I'm not sure. It's like a dollar for dollar matched grant type thing.
Yeah.
You know what? Who knows at this stage? I would give it a crack. What can it hurt? They can only say no. You'd rather ask and get a no than not ask, and they would have said yes. Yeah, perfect. And again, my last question for you before we close, Scott, have you got any questions?
No, I think there's just one here from Daryl that's been lingering along for earlier. What about employees that have been stood down where the company has decided to cease operations for the time being? If it requires the company to register but it's not operating, do they have obligation to restart to pay the ex-employees?
Cool. So they don't have an obligation to restart to pay those ex-employees, but they have the option to restart to pay those ex-employees. So a stood down employee, if a business has stood down, they might have closed or stood down some people, you can then apply for JobKeeper and get that employee the $1,500. You're not obliged to though. So if you don't want to apply, you don't have to. But if you just stood them down because they were surplus to needs or you were closing the business, if you're going to resume and reopen, and that's an employee that you would like on the journey with you long term, then you're entitled to pick up that stood down employee if you want to. So you've got an option, not a forced position.
And just lastly, I did actually forget to launch. We are learning it as we go along on here. I forgot to launch the poll. So if you are online still and you have 2 seconds just to quickly push that poll, we'd appreciate it if you could just jump on and have a look at this poll and just answer those questions for us. While you are in there answering those questions, I'm going to put this to you, Shane. You mentioned it briefly, your crystal ball. How long is this going to last?
Okay, I'm going to answer in two parts. I'm going to say life returns to some sort of normality in 6 months, and I reckon business might return to some sort of normality 12 to 18. Yeah, I mirror those. So I'm just looking at the poll as it's going through now. Again, I think the one of the answers there was by Easter, as President Trump said that the world is going to return to normal. The economy will be back by Easter, but yeah, clearly not going to happen. So at the moment, like everyone's sharing the sentiment. Most people thinking it would be 18 months before any sort of form of normality. Is the government stimulus going to help your startup? Kind of 50-50 at the moment. It's like 60-40, should I say.
60 saying yes, and 40 saying no, unfortunately. So clearly it's kind of showing us that there possibly more needs to be done in this field. Again, I know the government have tried to cast their net quite wide to kind of capture anybody and be as inclusive as possible, but there's always going to be some that fall through that. Shane, I'd like to thank you for your time. We will distribute these notes and these slides. And again, thank you so much. It's been a great session. Like I say, we had a number of people on here. And if anybody has any questions, feel free to reuse the email address for Shane or Kat. And they'll be willing to help you. Scott, do we have one next week?
Look, you know what? When this all started, I was a bit eager and I cancelled some of the upcoming morning startups. So I believe next week we had a pitch practice scheduled. No one has applied, or up until the point I cancelled it. So I'm not sure if we're going to have a pitch practice. If we've got a bunch of startups that want to have a crack, email us at contact@morningstartup.com. And
Brilliant.
we'll see if we can put together a pitch practice in a week. Otherwise, we've been reshuffling speakers, and I know we've got one that we didn't get to put on when this all came around, so that might slot in next week. But yeah, I think we'll have one next week.
I think so. I think
it is.
I think clearly there's a demand. Everyone's at home. You know, they're doing the right thing. They're staying at home, and they're doing their part. And I think, you know, this kind of content is to be good. So we will have some pitch practice next week. So thank you, Shane, again. Thanks, Scott.
Sure.
Thank you, everybody, for tuning in. And we will see you all next week. And yeah, cheers. Thanks very much.
Thank you very much. Thanks, Shane. Take care, everyone.